Welcome to Paging Financial Freedom, a podcast about doctors and spouses and the journey to financial freedom through real estate and tax savings. I'm Dr. Daniel Shin, a surgeon and real estate investor. You might know me on social media as the Darwinian Doctor or the founder of Serious Real Estate.
And I'm Lila Kaplan, former Wall Street professional, certified financial planner, and the person on a mission to retire my orthopedic surgeon husband in the next 5 years. I specialize in apartment investing, helping doctors and their families build true financial freedom beyond their W-2 incomes.
If you're interested in achieving tax-efficient financial freedom through real estate, you're in the right place.
Let's get started.
Welcome back to the Paging Financial Freedom podcast, the podcast where we pull back the curtain on what it really means to build wealth, live life on your own terms, and stop trading time for money. I'm your host, Dr. Daniel Shin. I'm a surgeon, investor, and founder of Serious Real Estate.
And I am your host, Lila Kaplan, full-time real estate professional and a former certified financial planner. As always, we're so glad that you are here with us today.
Lila, and today's guest is someone who I think our audience is really going to love. She's a physician, psychiatrist, mother of now 6, and co-founder of a real estate investment company that's grown from single-family rentals to a vertically integrated platform with more than now 2,300 doors and roughly 500 million of assets under management.
Wow, that's impressive. What makes her story especially interesting to me is not just the scale, it is the journey. She went through formal medical training to understand what allows someone to go from being stuck to then become a different version of themselves. And then she took that lens into real estate, entrepreneurship, marriage, family, and legacy.
All right, so she's the co-founder of Black Swan Real Estate, national speaker, leader of investor relations, et cetera, et cetera, et cetera. Our guest today is Dr. Elaine Stagerberg. Elaine, welcome to Paging Financial Freedom.
Oh my gosh, thank you both for that lovely introduction. I'm excited to be here today and have an amazing conversation together.
Perfect. All right. So Elaine, I just want to start kind of with the contrast in your story. And you trained as a psychiatrist in Mayo, which is, this awesome, prestigious medical environment. And then you're also now leading investor relations and capital for a major real estate platform. So, when you look back, does that path and contrast seem logical to you, or does it feel kind of improbable still?
I would say, honestly, it does feel a little improbable. When I think about, my day-to-day life today, leading Black Swan Real Estate and, a lot of time with my 6 children, and I look back at, kind of the earlier days, like the pieces were all there. If you had asked me when I had started medical training or when Nick and I and my husband first got married, if, this is what life would look like in 2026, I would have said, like, you're really confused. Like, you've got, kind of big pieces of the story mixed up, but then really the pieces were there, all the way back to the beginning. So kind of long story short, my husband and I both grew up in, pretty significant poverty. His mother was very ill. His father was not in the picture. I was kind of the opposite. My mother was not in the picture. My father was addicted to opioids and all of the kind of chaos that you can imagine as a result of that. And so when we met each other, we knew, even before we got married, that it was really important to us that we have financial security in our lives and that we raise our children very differently than we were raised. And decided that I would go to medical school, applied for medical school. I was about 5 years out of cycle. So I had done undergrad and then graduate school, was working for a couple of years. And it was during that time that I was applying to medical school. And then also during that time, Nick and I got married. We started our real estate investing. So like right back, even, at the origin story, right at the very beginning of our marriage, we were already talking about having a big family. I was planning for medical school and we had already started investing. We got married in October of 2011, bought our first rental in December of 2011, and I got accepted to medical school in November of 2011. So like all of the pieces were kind of right there. Now I had thought that we might have a portfolio of, 10 or 20 single family homes. Nick had a career in tech. I thought he would continue with that. I thought obviously I would, continue in medicine. I never would have dreamed of going to medical school if I had planned from the very beginning to not practice clinically. And then things just really took off with real estate, and we loved growing our portfolio together and growing many other businesses together that I'm sure we'll talk about during our time here together. And then the pandemic shifted everything. And that's a little, little kind of teaser for what's coming during our chat here. But the pieces were all there right in the beginning when I look back retroactively.
So, Elaine, when, people hear about psychiatrists turned into real estate founder, they may assume that you just did a career change. But I wonder if, your psychiatric lens can actually become one of your biggest advantages in what you're building. So, how has understanding human behavior helped you to build your wealth, lead investors, and make better decisions? Because obviously, you deal with a lot of investors, you deal with teams, lenders, property managers.
Yeah, absolutely. So when I was in medical school and I was making the decision for my specialty, in my mind, I kind of lumped them in together to like the thinking specialties. So, internal medicine, all of the things that go with that, the surgical specialties. And then in my mind, I put psychiatry in a bucket all by itself. And I think most people kind of don't think of psychiatry that way. But exactly what you alluded to there, I really thought of psychiatry as kind of the way I would speak to myself when I was in medical school and I was choosing, which residency to do. I said, I want to become the medicine. I want it to be inside of me, that I have it with me at all times. Now, never did I really think that I would then take that skill set and apply it to investor relations and growing a real estate portfolio. But I wanted a skill set that I could use with my own self, with my marriage, with my children, with my friends, with just my general way of thinking. And so not only did I choose to do psychiatry, but during my training, I leaned so heavily into therapy. Kind of the difference between psychologists and psychiatrists is psychologists are PhDs. They spend most of their training on therapy. Psychiatrists are medical doctors. They can prescribe medications, and then they usually do a little bit of therapy. And in many ways, I kind of modeled my residency training almost as like a psychologist. I spent way more time learning therapies than a typical psychiatrist does. And when I started growing Black Swan Real Estate and I started working with investors, it was so obvious to me, just kind of right from the get-go, that my way of thinking about their thinking was shaped so much by my understanding of psychiatry, because money is really just a reflection of value system. It's a reflection of the way one thinks about themselves, about their interactions in the world, about what they're fearful about, what they're excited about. And so I think even, very early on, our investors felt so seen and heard by me. And even to this day, I do almost all of our investor calls. And that understanding of human psychology has been a huge part of investor relations success in Black Swan Real Estate. Absolutely.
So those skills continue to be incredibly useful even now. But I want to just touch on something that you mentioned before when you talked about your kind of development, and in your childhood and your marriage and things like that. You touched on some financial insecurity as a child. And, a lot of times when I talk to people who are really driven for financial stability and success, there often is a common thread of scarcity and financial instability during their childhood. So, how has that driven you? Do you feel like it's still at this point, after what you've built, do you feel like that is still driving you, or has that kind of receded to the background at this point?
That's a good question. Early on, I would say I would have defined it as my desire for financial security really drove, most of my financial decisions, even, going back, outside of real estate investing, or even before I was married. Things like I was legally emancipated when I was 16. So I was, completely financially responsible for myself at a very young age. And I had a job. And when I would get my paycheck on Fridays, I would fill up my gas tank. That was like an example of like, I wanted to take that money and convert it into something that I needed. And I felt really good knowing I had a full gas tank. So like that desire to kind of squash that scarcity, goes all the way back into my earliest financial decisions that I was responsible for outside of my family of origin. And then when Nick and I first got married, I would say I was more risk averse than he was. So I owned my own home before we were married, and so did he. We chose to move into his home. And at that point, we knew we wanted to be real estate investors, but I was still rooted in fear. Nick, we just got married. I want to have children. I had just gotten accepted to medical school. So I was going to step away from my income producing career and go into negative income with student loans. And so I wanted to sell my home, and we listed it on the market, and we couldn't sell that house. It was in the post 2008 collapse. We were lowering the price over and over and over. It got to where we would have needed to bring like $40,000 to closing, which would have been our entire life savings. And Nick just kind of very nicely said like, well, why don't we try renting it? I'm like, oh, okay. And I really was not excited about that because I was still so in that kind of scarcity mindset. And I'm so grateful for that early, kind of shove off of a cliff, so to speak, into real estate investing, because I was able to see, oh, it's cash flowing and the debt's paying down and the market's recovering. And we always self-managed right from the beginning. And that, eventually became our vertically integrated firm. And then over time, I came to realize through lots of inner work, through, discussions with Nick, through experiences with real estate investing, that financial security and financial freedom are really two sides of the exact same coin. And sometimes what I'll see in partnerships or in marriages is maybe one person wants to invest more than the other. They might be like the go-getter, the one that is really focused on that freedom piece. And sometimes the person that is maybe focused more on financial security, and that was my persona during this time of our marriage, they're a little more risk averse, maybe want to do things more traditionally. Like I would have been, just much happier growing a liquid savings account, not even thinking about any return whatsoever, but just to be able to log into a bank account and to see that number in the bank account, whereas Nick was focused on growth. And I came to see that financial security and financial freedom are actually literally the same thing. When I say that out loud, what I visualize is holding a coin, and you feel two sides of the coin, but you're only holding one coin in your hand. And I think for me, when that really clicked, that opened up like this whole world of abundance that then became the security, then became how can we acquire more and more and more assets? So it shifted from sort of how do I protect myself and maybe how do I, hoard resources, hoard money, hoard gasoline, right? hoard resources, to how do I buy more and more assets?
Elaine, tell me a little bit about your husband. What is his background? Is he a doctor as well? Because, obviously your mindset is completely different than his. So I'm curious, what his background came from.
Yeah. So talked a little bit about how his childhood was similar to mine. We got married in our mid-20s. And he had a career in technology. He's a software architect, had a startup in Oklahoma City while I was doing medical school. And then he's actually from Rochester, Minnesota. So that was part of the reason why I even wanted to interview at Mayo. He always says that it's just like the turn of a lifetime that he ended up back in Rochester, Minnesota. The exact thing that he'll say is the one thing that could have brought me back here was a doctor. I can't believe I married a doctor and ended up back in Rochester, Minnesota. So for him, it's a homecoming that I matched to Rochester for my residency. We've been here 10 years now. And he and I founded Black Swan Real Estate together. So our first property was the home that I owned before we got married. Then we bought our first intentional property. We did all of the renovations ourselves. We were in that property painting, laying tile floor, hanging cabinets, you name it. We were doing that shoulder to shoulder, and we've grown the business together. And so today I would say that kind of the way we divide and conquer the portfolio is I work with investors. I raise capital. I'm kind of that forward-facing viewpoint of the business in Black Swan Real Estate. And then he is principally responsible for our acquisitions. And then he manages Black Swan Living. So that's our vertically integrated firm. We have over 100 employees, all of our property managers, maintenance, lawn, cleaning, accountants, you name it, all the people that are needed to run the portfolio. And that's really how we divide the portfolio today.
That push and pull you kind of mentioned between you and Nick in terms of risk tolerance and all of these things is so interesting. And I think that often is the case in a relationship where it just happens that one person is a little bit more about financial scarcity and a little risk intolerant, and the other partner kind of pushes the equation forward a little bit. In my own marriage, I often think back to the different experience that my wife and I have just grocery shopping. And my wife hates grocery shopping. She thinks it's a waste of time. She loves Instacart and getting it delivered. But there's something about being in a grocery and being able to pick out what you want and fill that cart and feel like you are providing for your family that I still really enjoy. And I think that kind of harkens back to that sort of concern when I was a child that might not be possible, in my own childhood. And I think that translates forward into a lot of sort of like later investment decisions and things like this. So, just moving forward a little bit, when you were kind of going down, let's move the timeline a little bit forward if we could. Like when you were going down that training process, you were already investing in real estate. And I think that's pretty unique. Most people kind of come to it, I think, later on when they start making a paycheck. Did that alter your desire for a long-term career as a psychiatrist, that kind of secondary business going on? Or what was the main force that drew you away from clinical practice, do you think?
Yeah. Excellent question. So no, I really thought that our portfolio would be, a leg of our financial wellness and certainly part of our financial freedom journey. But I really did not envision the life that we have today. I'll tell you the vision that I did have. I am a big believer in visioning. I love teaching people about visioning. So long story short, with visioning, the way that it's different than goal setting is you really see yourself. You try to, close your eyes, and some people actually see images or see little clips of movies. Other people don't actually see anything. They just sort of feel something as though they're kind of feeling like a movie that they're watching. And so I'm often connecting with my future self, and I really try to see my future self going through things. So what I saw when I was in medical school, at that point, we were investing. We knew we wanted to have a large family. I had our first child in my fourth year of medical school. So we didn't really have the pieces that we have today, but we had some sense of the pieces that we wanted to put into place. And I made the choice to specialize in psychiatry. And I had this vision that we would have an office building. And on one half of the office building would be, Dr. Stageberg psychiatry practice, and there would be a door. And on the other side of the building would be our real estate firm. And in the middle of the building, there would be this private little office that Nick and I would share. We would have lunch together. Maybe as we had children, like our children might visit with us, or when they were really little, we might have like a nanny there with the kids. And I would see this vision, and I wanted it so much. I knew I wanted to work for myself. It was one of the things that I really loved about psychiatry, is there is such an ability to run your own private practice. And so I thought Nick would do the real estate piece. I would do the psychiatry piece. We'd have this little office building together. Well, here's life today. In 2020, I left clinical medicine. It really wasn't even because of the real estate portfolio. It was because of the pandemic. We had 3 children at that time. They were very young. One of our children was born in April of 2020. And every time that phone rang, it was daycare saying that the kids had had a COVID exposure and couldn't come back for 10 days or however long it was. And we were just in such pain, as many families were during the pandemic, with childcare and exposures and quarantine and isolation and all the things. And I said, you know what? I have the opportunity to just step back from medicine for a while. This pandemic will settle itself down. A vaccine will eventually come out. And then at that point, I'll go back. So I actually just left my contract for 1 year. The intent was that I would leave for 1 year. And during that time, it was just so obvious that I would, help Nick with our real estate portfolio. And that was a huge opportunity for growth in the market. Interest rates were, super, super, super low. There was so much fear in the market. Many properties in Rochester, Minnesota, home of the Mayo Clinic, that had been held by the same owners for decades were all of a sudden for sale because there was so much vacancy in their portfolio. And it all just kind of came together. If you had even asked me in 2019 what 2020 would have looked like, I would have said, well, I'll be practicing medicine. And I would have explained that exact office to you that I just said in my vision. And then the pandemic changed everything, not just in terms of our family and my desire to step away from medicine to be with our children, but the growth opportunity that came from Black Swan Real Estate. Now, I did have the ability to even choose to step away from medicine because we had built our own single-family home portfolio. At that point, we had about 25 single-family homes that we owned ourselves, no investors, and that's what provided our income to our family that allowed me to say, hey, if I take this year and just kind of let this pandemic settle down, our family will be okay. So now today, Nick and I both run Black Swan Real Estate full-time. We have one office building. There's no psychiatry practice inside of the building. It's our real estate firm. And I'm sitting in my office right now. So if anyone's watching the video of this is my office. And Nick's office is right there across the wall. If I shout loud enough, he can hear me. And we run the company together. And so like I was close to the vision, even, way back in medical school. I didn't think there would be that big pivot where I would leave clinical practice and that we would run our real estate firm together full time. And the pandemic just really shifted everything. And so I got close to the vision, but then there was that big shift, and now we run the firm together.
If I could just follow up on that, the shift from doctor to outside of medicine, I think can be such an identity change, and this, I encounter this in my own life a lot. And I think a lot of physicians who venture into entrepreneurship deal with it. So did you have to have a significant sort of self-identity shift when you made this, or did it seem very natural to you?
Oh, it was so, so, so hard. So part of it was there was this, this pain from the pandemic. And I mean, I grew to just have this aversion to my phone, literally, because the only time it rang was when the kids were getting kicked out of school and, and the quarantine. And
I feel you because I still get that, right? Every time they call, I'm like, okay, what happened? Do I have to pick them up? I'm like 30 minutes away.
exactly. So that pain was going on. And I was thinking about, stepping back from medicine. And yet it was so hard, right? I had just finished residency, right? I was just sort of, okay, I've worked for, 8 years for this, 4 years medical school, 4 years residency. Why in the world would I step away now? And I remember lots of tears, lots of journaling, lots of, okay, I'll have a spreadsheet, and every day I'll wake up and I'll write in my spreadsheet, do I stay in medicine or do I leave medicine? And after 2 weeks, I'll see, which one comes out ahead. And then ultimately what I decided is that I didn't need this big grand conclusion. I could just say, I'm not going to practice medicine today. I'm going to wake up and I'm going to say, I'm not going to practice medicine today. And I deferred my contract for a year, but I always knew I could call them and I could say, hey, things have settled down with our family or with the pandemic, or maybe the vaccine came out or whatever it was. And I knew that they would say, oh yeah, sure, you can start at any time. I could always do a locums thing. I could always do a telemedicine thing. And so it went from like, oh, I need to make this big identity change to something much more temporary, which was just every day I'll wake up and I'll decide, am I practicing medicine that day? And that was so much easier because then I could just go into the identity change. And who knows, right? In an alternate universe, maybe I would have stepped back for 3 months and the pandemic would have settled down and I would have gone, full-time back into medicine. It just also happened to be that, during that same time, there were all of these market factors in real estate that allowed our portfolio to grow, really exponentially that year. And so that's just kind of how things evolved. And I've always kept my license active. I still keep it active to this day. And in Minnesota, you renew it every 2 years on your birthday. So it must have been in 2024. So I would have renewed it in like 22 and then in 2024. And at that time, I had raised probably about, let's call it maybe 70 million of investor capital. And I'm there and I'm, thinking about renewing my license. And I'd always had in my mind, like, well, medicine would be my backstop. If there was ever, a big, financial problem in our lives, I could go practice medicine and earn a very nice income. And as I was filling out my medical license renewal in 2024, I just sort of had this like inner conversation with myself where I said, okay, well, if things are good, then I'm here running the portfolio. And if there's ever a time when things are challenging, that's the exact time that my investors would say, you better be working hard for my money. You better be, taking care of the portfolio and doing everything in your power to steward my capital. And that was really when it dawned on me that it was extremely, extremely, extremely unlikely that I would ever go back to clinical medicine because there was, we just built this machine, right? And it wasn't just our capital. It was tens of millions. We're over 100 million now of invested capital. So it was a multi-year process. It wasn't just this like big, coming down of the hammer in 2020 of like, I'm out of medicine and that's it, never again. It was really this slow, like each day, I just kind of moved more and more into that identity. And it wasn't until many years into it that I really had the identity realization of, I will never practice clinical medicine again. Now, what I have done that's a little outside of the scope of this interview, since we're focusing on real estate, is I had that craving to talk to people about human potential and human growth and development and all of the things that come to me from that psychiatry piece. And I get a lot of that with Black Swan Real Estate, with talking with investors, growing our leadership team, all of those things. but it is fundamentally a little different. So in late 2023, I launched a coaching program that's specifically for physicians and other high performers that blends together psychiatry, entrepreneurship, leadership, real estate, financial investing. And it's all about helping people to visualize their dream life and then move toward it. So there's no patient-physician relationship. There's no diagnosis. There's no actual therapy. It's a group coaching program. But it brings out that psychiatry piece in me, that therapy piece, that human development piece. And now I feel like in 2026, I really have it all. I've got the mom piece, the 6 kids, working with my husband, sharing this office building, running the real estate portfolio, and then also getting to nurture that psychiatry, human development piece of mine through the coaching program.
Elaine, so you talked about visualizing your financial goals. So when you first started to pivot, whether it's going from clinical practice to real estate or from single family to multifamily, did you guys sit down and talk about this? Did you have a plan? Because, I see your My Freedom and Legacy Blueprint 2026 in the back. So I'm assuming that you guys sat down and had some kind of vision about your lives. And what did that conversation look like?
Yes. Oh, you guys have amazing questions. This is so fun. I hope it's as fun for the listener as it is for me. So way back when we first got married, we got married in October of 2011. In November of 2011, we started a very simple spreadsheet. And at that point, it was just like, we had a checking account, a savings account, a couple of student loans, a couple of cars. We both owned a home. And we did our balance sheet every single month. We decided that we would do our balance sheet around the 15th of the month, kind of mid-month when things are sort of the most stable. And we do it every single month. And it started out really small in a Google sheet. There was probably, I don't know, let's call it 15 lines. And then as we added assets and liabilities and other things, we added on to that, built our real estate portfolio. Then we kind of pulled out our real estate portfolio, and that was in a separate section of the spreadsheet, but just the total value would spool up to our balance sheet. And then now today, it's a multi-hundred line sheet. One of our full-time accountants does it. Probably takes her 20 hours each month to do it. And then we have a meeting where we debrief on it. And not only did it give us the data to work with, it gave us a time and place each month to talk about our finances. So we, again, kind of like the medicine, the identity shift there wasn't ever one big like, oh, let's sit down and talk about how we're going to run money in our marriage, or let's break through every single conflict we're ever going to have, or anything like that. It was just this check-in each month. And sometimes they were 5 minutes, and sometimes they would end up being, multi-hour long conversations, or even an hour, a night for several nights as we worked through things. Sometimes they were contentious. Sometimes they were really easy. Sometimes they were exciting. Sometimes they were challenging. And now what I teach people is having that conversation every single month. Number one, so that you're looking at the numbers. That's how you see what is growing your net worth. Is it your stock portfolio? Is it your real estate portfolio? Is it your crypto? Is it whatever? You can see what's working and then do more of it. You see patterns over time. When we go back and we kind of walk down memory lane, we're like, oh yeah, that was when we bought our first asset. That's when we bought our first big asset. That's when we did our big cash out refi and bought our townhome community. Being able to see that data is so important. But really, knowing what I know now, 15 years into this, the spreadsheet wasn't the important thing. It was having a time and place every single month to talk about money, our goals, where we wanted to go, and get on the same page. And today, I would say we are very much on the same page. I would say that it probably took us 7 to 8 years into our marriage before we were really on the same page. I was much more that, financial security. He was much more financial freedom. I was more like, hey, let's just save a bunch of cash. And he's like, no, we need to buy assets. I've been more risk averse. He's more, growth. Today, I would say we're very aligned, but it took a long time to get there.
Did you have to grab him and say, Nick, sit down with me? Or was he just so willing to sit down? Or is he a spreadsheet guy too? And the reason that I ask this is because my husband, every time I try to get him to sit down with me to talk about finances, he just falls asleep or whatever, says something really smart and walks away. So, but I agree with you. Having those conversations are very, very important as a couple because we talk about our physical health, we talk about mental health, but we rarely talk about our financial health. And so I personally think that's important because I come from finance. And I always tell him, if God forbid something happened to me, do you know how to get to your bank account? Do you know where the brokerage is? Do you know what properties we actually own? And he doesn't. So I have a spreadsheet for him. But you're right. I'm going to make a goal this year to really sit down with him at least once a quarter to kind of just go over things.
Yeah, I would say, you know, I think we both sort of waxed and waned, right, over a 15-year period. Sometimes I would want it more, sometimes he would want it more. But I would say across our 15-year marriage, there's probably been maybe 3 or 4 months that we didn't have a check-in. And I think because we knew the next check-in was always coming, that lowered any of the fear or aversion to it of this could be a 5-minute check-in this month, and that's okay. This month could end up being an hour-long or a multi-hour-long discussion. Maybe toward the end of the year, they would tend to be longer discussions because we would set our goals for the next year. But because it just became a part of what we do, it's well, we brush our teeth twice a day. It just is what it is. We check in with each other on our finances once a month. That took away so much of the complexity around it. And that's what I teach people is at first, particularly if a couple is maybe new to each other, or maybe it's a blended family, or there's been some money conflicts in the past, or really different money beliefs. At first, those monthly check-ins can be challenging, and that's okay. You don't have to solve everything all at once. Just pick one thing, talk about it in January. Pick the next thing, talk about it in February. Pick the next thing, talk about it in March. And exposure to anything, right? If you're afraid of snakes, first you look at pictures of snakes, right? Then you go to a zoo and you look at a snake through glass, right? There's the exposure to it. Same thing with finances. By having the exposure every single month, it brings down any of the fear or aversion to it. And then it becomes just, this is the place where we go, and we don't have to solve everything all at once. We just have to keep communicating.
And if I can ask you, so you spend a lot of your time now speaking to investors about putting their hard-earned capital to work, in a real estate venture, essentially. So I guess the people that you've talked to already have kind of gone from pre-contemplation to contemplation. They're thinking about it. They've already taken that first step. But even at that point, what do you see as the blockers to get someone sort of off the couch and actually investing their capital, or even to get to that point to where they're, ready for a conversation with someone like you?
I would say the thing that I see that's probably the biggest blocker for people is thinking that it's not possible for them. So particularly in medicine, for example, there people might say, "Oh, well, I'm primary care, or I'm a pediatrician," or name the specialty, right? I'm not X, right? And that shows up not just in that conversation. People will say, "I'm too young, I'm too old, I don't have enough." All there's limiting beliefs around why it's not possible for someone. And having done, thousands of investor calls at this point, I have a playfulness with it, right? So I might be on the phone with someone and maybe that person says, "I'm too young." And I'll just sort of laugh and I'll say, yep. My call earlier today, they thought they were too old, right? And I can have this playfulness with them of almost everyone has something that they'll share in that phone call of, "I want to invest, but this." And just knowing, to the listener who's listening right now, maybe something's coming up for you in your mind. You're too young, you're too old, your specialty this, you have this obligation, you have this kid going to college, your family this, what you learned in childhood this, whatever it is, just know that everyone has that. And that's just the human mind. That's what our human mind offers up to us, ways to keep us safe, to keep us secure. The human mind is not necessarily innately wired to just go out and grow and thrive, right? If you think about what we're here on earth to do, we're here on earth to survive another day, right? We are not necessarily here on earth to enjoy life and expand and grow in abundance. We have to work really hard on training ourselves to have that bent. And so when kind of the thing that I, suggest to everyone is you've got to let that go. let's do the age one because it's like the easy one. Like for every person who thinks they're too young to start investing, there's a person who thinks they're too old. I've missed the boat. You just have to choose, right? With the information that you have at hand today, what is your next best decision? And then you implement that decision, see the progress. And then the next day, much like I said, how I made the transition with medicine, like what is the next best decision that you can make the next day, the next day, the next day? And that's how progress happens. And I think sometimes people will look at someone who's further ahead than them and there's this sense of like complexity or must be nice or, oh, well, they had that growth because they were able to invest during XYZ economic period or whatever. Again, all of that are thoughts that, our mind offers up to us. The, people who are further ahead than me, than you, than the person listening, it's because they put one foot in front of the other day after day after day. They had wins, they had challenges, they had ups, they had downs. And you just have to put your, one foot in front of the other and make the best choice you can with that day and then keep doing that and doing that. And then it becomes more natural, right? Just like in medicine, right? Remember that first day of, say, residency, right? When there's rounds and I'm like, do I even speak the same language as these people? Like, how are they talking to each other so quickly? And everyone seems to know what's going on, right? And then before you know it, you are literally running it in your sleep, right? You're holding the pager overnight. You're running a whole hospital floor overnight on call, all the things. Investing is the same way. At first, you're looking around and you're like, I don't even speak this language. What is going on here? You learn one word and then you learn a sentence and then you learn a theory. And then before you know it, you're the one having those conversations. You're the one making those decisions.
Elaine, so now that you have built this massive $500 million business, what was the hardest part about getting to this point? Is it the capital, operations, people, risk?
It's always the mindset of the leader, right? So it's always Nick and I as founders, as leaders of this organization. It's always us growing, learning, asking ourselves, like, what are our limiting beliefs? What are our blind spots? What are the things that we consciously or unconsciously are allowing us to hold us back? An example is for a long while when we were at, say, 100 million, 200 million, we would maybe start to use the word billion. Like, oh, we want to be a $1 billion company. We want to have $1 billion of assets under management. And I would say that either to Nick or maybe to our leadership team or even on a podcast, or maybe if I met someone at a mastermind or something. And then immediately in the back of my mind, my inner silent voice would say, like, well, that's not true. That's never going to happen. Right? Like, we all have that. Yeah. Like, we all have that. And so there's this like, this like inner dialogue, right? Where that like little voice would say, like, I don't know why you say that, right? That $1 billion, like, who do you think you are? And then I would have to use my conscious mind, my frontal lobe, and say, okay, you're welcome to think that. We're just going to keep growing and buy this asset and this asset and that asset. And now when I say $1 billion company, I'm like, well, of course, like, we're at $500 million. Like, we just, we just have
halfway there.
Yeah, we just have to keep doing what we're doing to get there. And now sort of the, limiting belief that I might share, like, in my own self is sort of seeing, like, well, what's the next level? For me, like, linear growth is really easy to see. Getting to $1 billion company, $1.5 billion, $2 billion, that's just a matter of continuing to acquire assets and manage them very well, just like we've been doing for the last 15 years. And now for me, the next layer of growth is kind of figuring out what it is that I don't know. What's the next level of growth that I can't even see yet? How do I find the mentors, the people who are ahead of me, the next round of inspiration, putting myself in the right groups, putting myself around the right peers, like all of those things? That's what's needed in my own personal growth to take the company, not just to that $1 billion mark, but to something that I can't even describe yet. So I learned that from Tony Robbins. I want to give credit where credit's due. Like, the growth and the success of a business is always a direct correlation of the mindset of the leader.
That's amazing. So I guess, one kind of follow-up to that could be, do you see in the past when you were building this incredible, point where you are now, what was a mistake that you made sort of as a spouse or as a leader that, looking back, you would warn others about, maybe when they're growing their own real estate portfolio or when they're transitioning from training to attending life? Anything that you can think of?
Hmm. The thing that most comes to mind in my own particular journey is there was a long period, probably about 5 years as we were growing the portfolio, where Nick and there was very much a duplication of effort. We both wanted to be in charge. We both wanted to be the leader. We both wanted to kind of approve each other's decisions. And how that manifested in our business is it became very confusing to our employees, to our team members, what to do, right? I've shared with you, I tend to be a little more risk averse. He tends to be a little more risk tolerant. So they might say XYZ situation, and I would say do option A. And then the next day, Nick would say like, oh, no, do option B. And we were both right. Like, just like medicine, investing, many things, like there's multiple right answers for something. It's just, different philosophies, different ways of thinking about the world. And that was a period of challenge. It was challenging in our marriage, as you can imagine, right? We'd have these, interactions in our business where we were undermining each other, essentially confusing for our team. And then we'd go home in the evening and we'd be like, what? Like, I said option A and then you told everybody to do option B. I'm so frustrated, right? All those things. How that might show up, maybe someone's listening like, well, I don't run a business with my spouse or those sorts of things, is thinking about zones of genius inside of a marriage, right? So now today, I talked about how we've kind of split the business. So I do investor relations, I do asset management. I really grow that forward-facing part of Black Swan Real Estate. Nick runs our property management company, Black Swan Living. Well, obviously, those two things are very, very closely intertwined, right? I need to know what we're acquiring, why he's excited about it. He needs to produce the outcomes for me so that I can get what I've, offered to our investors. But we have clear lanes. We have that in our family too. Things in our household, things in the way we parent, things in our marriage where we have very clear lanes. Now we have complete veto power over each other. We don't just allow, one person to just blindly lead the other. We know that we both bring expertise and a way of thinking to all of these different, domains in our life. But for example, Nick will say, Elaine runs the schedule. I just go to my Google Calendar and I see what's on my calendar and I just go where I'm supposed to go. Now, I don't necessarily run his Google Calendar during his work hours. I trust that, he can call the shots there. But I'm the one that says, this is where the soccer game is, and this is where we're going on vacation, and this is when you're out of the office and all of those things. And he just knows, like, Elaine runs that part of our lives. And I know there are other parts of our lives that he runs. And we made that change, relatively recently, probably around 22, 23, so pretty late into our marriage. And that has given us so much freedom, so much growth, so much ease in our communication, has allowed growth in our business because we believe in each other. We're rowing in the same direction. And yet, he's rowing part of it, I'm rowing part of it. And there's not that like duplication of effort and a reversal even of effort, both in our personal finances, our marriage, our kids, family, business. It was a big shift. It was a painful shift, but it was necessary. And now on the other side of it, many, many years, I see how much fruit it has bared for us.
Yeah, I mean, you guys are amazing because I feel like a lot of it's definitely communication. I don't know if I can ever work with my husband. He would drive me crazy. We always talk about going on the amazing race, and every time when he failed to listen to me, I was like, "We're not going to win the amazing race now." And then he's like, "Okay, let's do it."
And we had that, like when we first started working together, we were always growing our portfolio together. But when I say working together, I mean like 2020 onward, when we were both, full-time in our real estate business. We were working together. We shared an office. We were sharing all of the decisions. And that was really, really challenging. And so now, we kind of joke with each other that, yes, we work together. Yes, he's literally right across the wall. We're in the same office. We're running the same companies. And yet we have such different roles in the business that we check in with each other like a normal couple. At the end of the day, we're like, well, how was your day? What decisions did you make? What's going on in your world? And I think that, pleasant separation is good for us, is good for everyone. So we had to figure out, how do we work together, but we're separate enough that we both are in our zone of geniuses and we're not just butting heads.
Right. Check in, check out. Um, so then for couples who are listening today, one may be a doctor or both of them may be a doctor. What advice can you give them, with one person being, risk averse and then the other one risk tolerant, to get into more of an institutional level products that they can feel comfortable with? Because what I've experienced early on in finance and going through this residency program with my husband is that early on, you guys are poached and prodded by financial advisors early on. So your early financial education is about stocks, bonds, mutual funds, probably disability insurance. So it's all the products that you get sold to. And now you're coming with this institutional level product that you're essentially still, it's an opportunity, but you're still selling to them. How do you get them to be comfortable? Not only but by one person, but the entire relationship.
Yeah. I think one of the beautiful things about real estate is there are so many ways to do it. Someone can do active investing, someone can do passive investing. Inside of active investing, someone can do short-term, long-term, someone can self-manage, someone can have a property manager, you can invest locally, you can invest remotely. Inside of passive investing, you can choose, different asset classes. Is it apartment buildings? Is it office? Is it retail? Is it industrial? And then, for most people listening are probably considering doing, residential passive real estate investing, right? That's what your firm offers, what my firm offers. But even with inside of that, you can choose a particular syndication or fund that's maybe cash flow heavy or maybe more long-term growth, more equity heavy. There's so many different options. And it's really about finding an operator that you trust their decision-making algorithm, you trust their ethics, their way of thinking about the world. But then even with inside of that, they likely have several different offerings, maybe where one is more cash flow heavy and one is more equity heavy. And then you can decide, like, this is what fits my goals right now. And so, if you think about that going back to that coin of like financial scarcity and financial freedom, maybe a couple is, one person wants to invest and the other, maybe the person who's more like freedom focused wants to get started with investing, and the person who's maybe more security focused wants to say, like, oh, I want to do, just traditional stocks and bonds. I'm afraid of real estate. Well, maybe your first real estate investment is something that's more cash flow heavy. Maybe it's a preferred rate of return, something that's simpler to understand, something that has monthly distributions, right? So you can get both people's needs met and their desires met. And then from there, you can build more, right? Maybe you decide to go into something that's maybe a little riskier, but has more of a long-term potential upside. The beautiful thing about real estate investing is there are literally an infinite number of options. What I like to say to people is, what the number one decision is, for this dollar with my goals today, because it changes. Maybe when you're earlier in your career, you have a little more time. Maybe you haven't had kids yet and you think, I want to do some active investing. And then maybe 10 years later, you've got some kids at home, you're more established in your career, maybe your time is more valuable to you at that point, and you want to go into some passive investing. There doesn't need to be any big, like, grand, I am an X investor, right? Like, you don't have to say I am an active investor and then that's it, right? It doesn't need to be an identity proclamation. For this dollar in this moment with this goal, what is the best investment I can make?
Amazing. So one thing, as we wrap up here that I've been wondering about is, you and Nick are going to leave behind a significant portfolio for your kids. That's just the bottom line. So what do you hope that they are going to learn from you to help guide their own financial journeys?
That could be like its own whole episode, right? I'm not an attorney, but I'll say, everyone listening, if you have a life insurance policy, you should be thinking about having a trust. Everyone that's listening should have a trust. We set up our trust when our first child was like 8 weeks old. We had almost no assets. Literally, the only thing we had was our life insurance policies and a couple of cars and a bank account. But thinking about what you want the world to look like when you're gone is such a profound experience. So working with our estate attorney And he would say, well, what age do you want your children to receive their inheritance? And do you want any restrictions on that? And how do you want to support higher education? And ultimately, we've decided that our kids will receive their inheritance from us very late in life, like into their 30s, into their 40s. The good Lord willing, we're still alive at that point. But if we were to pass away and our trust were to kick in, we put things into place where they would receive money from us very late because we wanted them to go out and create their own lives and their own education and their own careers and not just have this big windfall. But really thinking about, who do you want your children to be? What lessons do you want to impart to them? That is so much more important. I'm in many different masterminds with high net worth families. And that's the theme that I see is, yes, we have to teach our children how to tactically spend the money. But more importantly, we have to teach them the people that we want them to be, the value system that we want them to have. And then from there, then they'll be able to create the life that you want for them, make the decisions that you want for them. And the money will be a helping hand to them and not a hindrance. It's so exciting to me. Our oldest children are 10 and 8, and they have little jobs in the business. We made them go through like the full HR process. They had to be interviewed by our recruiter. And I said to our recruiter, go soft on them, but this is not like a guaranteed job, right? They don't just get a job here because it's mom and dad's business. But now at their ages, getting them involved a little bit more in the company and getting them to see, where value creation comes from and how we interact with our business and what is it like to acquire a building? What is it like to go through a big renovation? What is it like to lead a company? How do we make leadership decisions, communication decisions, and thinking about just what is the decision-making algorithm that we want to pass on to them? And then the money is just a byproduct.
Great advice.
Well, Elaine, we really, really enjoyed this conversation. But before we go here, we like to do a couple of rapid fire questions. They're super fun. Don't think too much. It's whatever that comes to your head, just let it out.
Yeah, let's do it.
Okay, so best financial advice you ever received?
Anything from Warren Buffett.
Okay. Worst financial advice you ever received?
I would say in general, the idea of letting the tax tail wag the dog. So make your investment decisions because they're sound investments that also have some good tax advantages. Don't make an investment decision exclusively for the tax advantages. I'm not a licensed professional or anything, but that's what I would suggest to my own self.
100% agree.
All right. So best purchase you made when you first started making real money? It could be anything.
Oh man, that's a tough one. I would say it doesn't exactly answer your question, but what comes to mind is, we have 6 children. And so we spend a lot of money on children, clothes, school, soccer, you name it. And sometimes those numbers are like a little bit painful when I look at them, on the whole, but man, are they worth it.
Oh, so sweet. All right. Last one, a book or an idea you return to often?
The Road Less Traveled by M. Scott Peck. He's a psychiatrist, totally different way of thinking in the world. I've read it many, many, many times. I think anybody that picks up that book, The Road Less Traveled by Dr. M. Scott Peck, will leave fundamentally a very different person.
Awesome. I heard of the book, but I haven't read it, so I'm putting that down in my notes here.
Truly, it's amazing.
Elaine, this has been such a great conversation. So before we let you go, where can people find you, Black Swan Real Estate, and your educational work?
Yeah. Our website is meetblackswan.com. From there, you can link to our socials, block a time on my calendar, subscribe to our newsletter. If you search for us on Instagram, Facebook, YouTube, Black Swan Real Estate, you'll find us on all of those platforms. And then all of it is right there on the website, meetblackswan.com.
Perfect. Well, thank you so much for being on Paging Financial Freedom. And we will hopefully talk to you again soon.
Yeah. Thank you for having us.
And to everyone listening, thank you for tuning in. If this episode gave you something to think about, share it with someone who needs to hear it. We will see you next time. Bye.
Bye.
Thanks for tuning into Paging Financial Freedom, where we help doctors and spouses like you take control of your finances, invest smarter, and build a life by design.
If you enjoyed today's episode, don't forget to subscribe, leave us a 5-star review, and share this with someone who needs to hear it.
And remember, financial freedom isn't just a dream, it's a decision. So let's get there together.